In this video, we're going to be talking about how to trade the gap fill strategy as a swing trader or as a day trader using options to see returns of up to 200 to 600%. Before we dive into the details, go ahead, subscribe and like this video, and let's dive right into it. All right, let's dive right into it. Okay, so what are gaps? Gaps are pretty straightforward. Okay, the main thing we're looking for gaps is that price closed somewhere and then opened all the way at another area. So for example, here on TGTX, we can see that price closed up here, and after the earnings report down here, price opened up all the way down here. All right, so this hollow area right here is considered a gap. Okay, and that's exactly what it is. It's a gap. There's no candles, there's nothing, there's a gap. Now a chart can have many gaps, right? Here's another gap right here, and then there's another gap back here. These are smaller gaps. Okay, what we're really looking for is those bigger gaps. Okay, and this bigger gap right here is the one we're really interested in. All right, this one right here. Now, how do you trade these and how can you take advantage of it? Okay, first and foremost, the main thing you want to look for, okay, if you're going to be swing trading these, is you want to have at least one candle close above the old resistance line, which in this case would be 1192 or 12, or a second daily candle fully out of that level. Okay, these are the two things. I like to wait and get that candle close above our key level. That way it confirms we've eliminated a few resistance points. So we have a resistance point here, a resistance point here, and we also have a resistance point from this prior day that we tried to break out, right? So these resistance points tell us that sellers are preventing us from entering this gap fill. Once we've entered this gap fill on this candle right here and we closed the day on top of that, that's going to be your cue to move and buy a position for a swing trade for maybe a few weeks or 2 months out in order to take advantage of that big move. All right, and that big move that we're looking at is this move right here. All right, so we have the big gap, we have the candle close. What do we do at this point? At this point, we're going to want to try and find an option contract that allows us some time. Remember, we don't want to buy same week expiry, although that does create volatility and does create some great opportunity to see returns. We want to be on the safe side. We want to buy at least 2 to 3 weeks out so we have the opportunity to get this to move. Okay, now when you enter here, where is going to be your stop loss? Well, you are taking an option contract with a few weeks out. So if price comes back under this level and closes back under here, you can simply just get out of that trade. Remember, we want that momentum continuation to push us higher. So if we break out and then the next day fail right under it, well, that's going to be our go-to sign to get out of that trade, regardless of how much that contract has lost value. That setup is no longer going to work. Okay, so again, we get this daily candle close. Let's say today is it's November 17th. We're going to look for expiries that are maybe 2 to 3 weeks out. That'll probably bring us to maybe December, early December, or December 20th in this case, right? And that you can see really easily the stock made a move right here from $12 all the way up to 19, a 57% move on the underlying. And you could just imagine how much that option contract is going to move in the next, in those few days, right? It was 28 days. It made a 50% move in 28 days. So that is a gap strategy that you can use. Now, how do you use the gap strategy for intraday trading? All right. So how can you take advantage of the gap strategy to intraday trade? And the same concept really applies. The only thing that matters now is we want to see this candle get above 1192, and we want to look at the pre-market and see if there's any room for upside continuation. So I'll show you an example of that. So we're going to go back to November 20th. All right, so let's go intraday. Let's change this to 120 days out. Let's go to the 2-minute chart. It only has 5 minutes. Let's see if we can do 2 minute. All right, so it looks like it only does 2 minutes. That's fine. So let's go to November. What was it? November 20th. This is January. Let's keep going back. All right. This is November 18th. Perfect. All right. So this is that day where we closed, right? So this is that day where we closed over that 1192 level. All right. So what are we looking at in this regard? So there's two ways you can trade this. On this day, we know that price closed above this 1192. We know we've entered a gap fill. So how do we now go ahead and trade this the next day, all right, the following day? And the following day is right here. Okay. So we're looking at price action from the day before. We know it closed above. We're coming into pre-market, and we know we have some resistance right here at 1250. We know yesterday's low of day, yesterday's support was around this 1180, and we have daily support at 1190. Okay, so there's two ways you can trade this. Coming into the pre-market, you know that the overall picture on the daily is in a gap fill, right? So this means that we're looking for upside momentum. Okay. Now, there's two ways you can trade this. You're sitting here at pre-market. You know the daily is in a gap fill, so it's got momentum upwards. You have resistance at 1249, and you have support at 1190 and 1178. Okay, so your first option, right, is going to be the pre-market high trigger. All right, so that's going to be your first option. That means if 1249 breaks, you can take it to the upside. You can buy calls to take advantage of that move. Now, when we're day trading, obviously we're going to be using same week expiry just to be able to get in and out the same day. Obviously, never take a day trade and turn it into a swing trade. The objective here will be to take same week expiry, get in on the break, get out on the move up. Second option is that we pull back into support. We look for reversal patterns and go long from there. So we're looking for pullback into support. All right. Sorry, I'm left-handed and my mouse is on the right side, so I don't have the best writing abilities. Okay. So pre-market high trigger is our first one. The second one will be a pullback into support and look for patterns or candle combos. Okay. Now let's take a look at what happens here. I'm going to erase these here, and let's take a look at what happens as we move forward. Okay. So coming in, market opens, and this thing yanks right out of the gate. Right. It plummets down, and this is, not a very good candle. There's nothing here. There's no setup. There's no hammer. So we don't do anything there. But bam, now look what we have. We have a hammer candle right at an area of support that we already knew existed. It's 1192 was that level on the daily that puts us in a gap fill. And this thing continued pushing upwards from there. All right. So we got the hammer candle. We got the buyers coming in. And take a look at what happened. Right. It just continued pushing up. Right. Now, if you had missed this hammer candle, right, what was our second game plan? Our second game plan was the pre-market high break, right? So we got this break right here, and you can also see how the volume spiked at the bottom, right? I always talk about price action and volume. This volume spiked at a level of resistance, which is pre-market high, and that right there gives you the confirmation for that move higher, okay? So now let's take a look at what happens. This thing continues pushing, and already a significant enough move that you were already paid on, right? So had you taken this candle right here, this move up into this pre-market high resistance would have been your first target. If you took the breakout here, you're already getting paid on this move up as well, right? If you're taking these as day trades, right? And obviously, this is exactly what we look for when we're looking to take these swing trades or day trades, all right? So we start from the back, right? We start from the daily. The daily tells us that we have these gaps and pockets that we can take advantage of, and from there we take advantage of the move that follows the daily level. All right, so the daily was it entered a gap fill. The next day we were looking for upside continuation, pre-market set up, we knew our support, and we got involved. Right now there's lots of these that you guys can find. All you have to do is really scan them using FinViz. If you haven't watched my FinViz video, go ahead and do so. And just put them on your list and watch for them and have triggers that allow you to take advantage of the move, right? So here's another one on Meta, right? Meta has a gap from this day, a gap down to here, right? So right over here, we have the candle close, right? And then a gap down all the way here, all right? So this right here is a big gap that Meta had fallen into, okay? So what happened? And when is the opportunity to get involved here? Okay, so if we take a look right here, right, this candle closed above that that level of 248.48, which puts us in a gap. If you missed this, you had another daily close above that level. And from then on, this thing continued pushing all the way up to this area of resistance, which is a 26% move before starting to see some selling pressure. Right? You can see the move up was pretty fluent until it filled the gap. The gap was filled at 317. The bottom of this day was 317. You can see once it got there, it started seeing some selling pressure before consolidating for some time and then breaking out, right? So that is an example on Meta. Here's another example. Netflix is another good one. Okay, so let's take a look at Netflix and discuss where this gap kind of started and where people can take or took advantage of it. Okay, so here's another one right here on Netflix. Let me bring this up. Perfect. So we have a resistance point right here on Netflix, a resistance point right here on Netflix, and a resistance point right here on Netflix. All right. So we never really get a close above this level until this candle right here. Right. Once you get that first close, you can take advantage of it, get in for the swing. In the next few days, this pays significantly as it continues pushing upwards. And you can already be green and take your profits on the way there. All right. Now, obviously, this did a lot more up and down, but that's why buying time is important if you're going to be swing trading this. And you can see very easily it ended up hitting this target of 331, which essentially fills the gap. All right. There's lots of them, guys. All you really have to do is scan nightly, come up with these pockets or gaps that you find, and then from there, put them on your watch list and look at where you can enter. Okay. Here's another example on RTX. Closed up here and then a gap down all the way here, but we put a resistance points right there. Right, once we have that resistance point, we need to get above that level in order to continue pushing into the gap fill, and we got that right here. Right, this candle right here after earnings gave us the close above that. We've entered the gap, and now we're slowly making our way up until we hit this 96.11. And lastly, let's take a look at CFLT. This was another one that was beautiful on the gap fill side. And again, right here, you can see this one enters the gap fill on this candle right here, right? You have a close here. It opens up all the way down here. You have your first resistance point, which is going to be the first level of resistance that we need to close above in order to enter the gap fill. We did that. Volume spiked. And you can see if you entered here for a swing trade of maybe 2 to 3 weeks out, it made a good job pushing its way back up to that resistance point. All right. So very, very good and easy setup and system to find for day trade and swing trade. Again, all you have to do is go into the closer time frames and find a setup that works with your thesis on the daily, that it's a gap fill or, an upside continuation that aligns with that. All right. So hopefully you guys did find value in this. Gaps are something that, have been around for decades and decades. Not many people take advantage of them, but if you guys are having a hard time trading and really don't know where to start, maybe this is one avenue that you could take along from all the other things that you guys could do. But I think this is a very basic one. Find the gap, wait for a daily candle above that level, and then buy some calls for a few weeks out. That way you don't have to day trade and you have the ability to take advantage of the moves up. And it could be pretty lucrative as well, right? We could see returns of anywhere from 200 to 7, 8, even 1100% returns if the move happens quickly enough for you guys to take advantage of it. All right. So hopefully you guys did find value in this. If you did, please subscribe, like this video, and I will catch you on the next one.